on Business Incorporated today. Africa Investment Forum virtual boardroom meetings ends today. Business operators in Nigeria count their losses as diesel price soars. Egypt records first production at MSD-25 well. Hello and welcome to the Thursday edition of Business Incorporated here on Channels Television. I'm Amy John Mekwa. As usual, let's start with market numbers. In Africa, they were mostly positive at intraday. Nigeria's main index was up the marginal 0.04%, continuing yesterday's uptick. South Africa's GSE index was also up much more, in this case over 1%. On the flip side, Egypt benchmark index dipped by 0.27%, while Kenya closed Wednesday's session negative. It was down 0.19%. Over in the Middle East, major indexes traded were mostly positive at intraday. The Abu Dhabi main index was up 0.18%. Dubai's index was also up about 1%. Elsewhere in the region, Saudi Arabia's main index was also in the green. It had almost 1% added to its index, and Qatar index was not left out. It was up 0.89%. Well, as Russia's invasion of Ukraine continues, we're witnessing a changing world order, not just political spheres of influence, but also competing economies on commodity markets. We have Ben joining us now from Berlin to tell us what the latest about this is. Hello, Ben. So Europe's bread basket, which is Ukraine, would export almost nothing of wheat this year because, obviously, of the war. How much of a concern has this brought among Europeans?
Well, it's a huge concern for Ukraine as a country as a whole, considering that wheat is one of its biggest revenue earners. It's one of the biggest exporters of wheat in the world, of maize as well, and sunflower oil. It supplies almost half the world with sunflower oil. So we're talking about knock-on effects, not just for Ukraine and the people of Ukraine, but also around the world on commodity markets. One big problem is that it exports via the Black Sea. And with cities like Odessa and Mariupol, two ports that are under attack, this is going to make that very hard. The question, though, is whether or not it's going to be able to export anything at all. A lot of this wheat that is produced is going to be needed for domestic use, and that is questionable in itself. A lot of farmers are off fighting. There are reports of farmers finding shrapnel in their fields, which means they can't use heavy machinery to harvest that wheat. There's also a lack of fertilizer, and this is already seeing shortages on the world market. International wheat prices have hit record highs, and key customers are going to be affected, both in Africa and the Middle East, Turkey, Tunisia, Egypt, where prices of unsubsidized bread are already up 25%. There's also news coming in from the United Arab Emirates, which is a gateway to the Middle East for many exporting countries. It intends to begin trade talks with Australia, which is a top producer of wheat. So there's a lot of jostling going on in the background as to whether who's going to supply whom on wheat markets and on commodity markets.
Yeah, so what about India? Is there a chance that India could step in?
Well, India is already the second largest producer of wheat in the world, but it only accounts for less than 1% of wheat exports. It mainly focuses on its neighbors like Bangladesh, which is also a main customer of Russia. So we could see a country like Bangladesh swing towards India in this case. But India is going to have to expand its infrastructure massively, its rail capacity and quality testing labs. There are reports from India that this is already underway, and that Mr. Modi is talking about cashing in on a big opportunity. Sadly, we're talking about Ukraine's loss here, India's gain. But a switch to India for Indian wheat for other customers, well, that's yet to be seen. And I bet there are a lot of countries that are critical over India and its silence of the invasion of Ukraine.
And then oil prices continue to climb. Where does that fit into this analysis you just gave?
Yes, it's not just bread and other foods where prices are rising around the world. It's also oil, which is putting pressure on households and businesses. And as we see inflation rise, we're also seeing interest rates hike. Now, that's an added pressure, of course, as far as borrowing goes for households and businesses. That's going to hamper investment and could see a downturn right at a time of recovery. The world is trying to recover from the COVID-19 pandemic. Higher prices, though, as far as oil goes, is a positive for Russian President Putin. It means more money for him, propping up his war chest. Experts estimate that he earns about €1 billion a day from Russian oil and gas. The sad thing here is that Germany and others are refusing to cut off their dependence on Russian gas, and that, of course, is bad news for Ukraine.
Yeah, well, I guess it's not that they're refusing to, but there's no alternative or reliable alternative at this time. Well, thank you so much, Ben, for giving us that update. Let's move to the UK now. While China is dealing with escalating cases of COVID-19 in, I think, about a week now, well, in the UK, online grocer Ocado has its workers returning to office, and now the UK has cancelled COVID-19 tests for some travelers, including Nigeria. We have Juliana joining us now to tell us, so what are the requirements now, Juliana? Good afternoon. What are the requirements now that Nigerians and others do not have to take the COVID-19 tests?
Good afternoon, Innie. Yeah, so that announcement was made by the government earlier this week, but I suppose I should start really with the breaking news, which we were expecting from the Bank of England. They have decided, not unanimously though, 8-1 to raise interest rates in this country to 0.75%. So just as we saw overnight in the US, we've had a quarter point raise. So this 0.75% is exactly the interest rate level that this country was in before the pandemic, which is over 2 years ago. And now lots of economists are trying to go through their minutes. I tried to grab a couple of sentences before I came into the studio, but they did mention the war in Ukraine. Very, very rare for central bankers to discuss geopolitics, but of course it is the topic of the day. So they did condemn in its entirety what's happening in the Ukraine at the moment. They also, of course, referred to inflation, which is currently at 5.5%. At their previous meeting, they said it could rise to 7.5%, but they've now gone further and said it could go to 8%. I suppose I'll discuss that in detail with Laddie tomorrow. Yes, as you were talking about the travel restrictions, again, yes, this was discussed much earlier on in the week by the British government. I believe it was over the weekend that come tomorrow from 4 a.m. there will be no more restrictions on people travelling into the UK. And yes, this does include passengers coming in from Nigeria. Again, this is all a part of Boris Johnson's government's Living with COVID plan. This is in the guidelines that was announced just a few weeks ago. So this is for vaccinated and unvaccinated passengers. You also no longer have to take or fill out this passenger locator form. It is a risk. Britain is an outlier, but they have said that they want this country to lead the way in living with COVID. And I suppose these are the sort of measures that will get the world to that destination.
Yeah, well, I guess the risks should also be measured. But in other news, P&O ferries suspended sailing ahead of a major announcement. What's this announcement we're expecting?
Well, we're waiting for the announcement. This is a pretty serious story, actually. It's live and ongoing. We've already heard some comments from the Prime Minister's spokesperson, as well as the Transport Minister, Grant Shapps. Now, P&O is the largest operator of ferries going between Dover and Calais. They have decided to halt all operations as of now, because, as you said, there is this major announcement, and we expect that this has got lots to do with staff, as with other travel and leisure vessels. They have faced increasing pressure since the onslaught of the pandemic. They did say last year that they would be willing to let 1,100 staff go because of how much debt they had accrued. And now it does appear that this major announcement is going to be the loss of hundreds upon hundreds of jobs. And the RMT union are not happy about it. They have released a statement along with statements from government. Again, this is a live situation, so it's still developing. The RMT union, who look after the well-being of workers, have said that we've instructed our members to remain on board all of these P&O ferries, and are demanding that UK operations are protected, and that the Secretary of State intervenes to save UK seafarers from the dole queue, dole meaning the job centre line. The Transport Secretary said he's concerned about the news just breaking on P&O ferries, and he understands it's only a temporary pause, but it's causing disruption on the short straits, the Port of Dover, as well as some other ports. So I suppose we'll have that information shortly, but it does appear to be that P&O Ferries will be announcing a huge cull of their 1,100 strong UK workforce.
All right, Juliana. Well, just in a second, if you can, or two, how's the market at this time?
In positive territory, FTSE All Share is up, the FTSE 100 is up, and the FTSE 250 is down. There was lots of momentum following the hike in interest rates, which is why we're seeing investors pretty pleased at intraday, Annie.
Juliana, thank you so much for that quick market analysis. Enjoy the rest of your day. Let's just do a very sharp one. In Asia, the shares rose today as the Chinese market continued to extend gains from rebound, while the U.S. Federal Reserve announced its first rate hike in more than 3 years. Hong Kong's Hang Seng Index led the gains among the region's major markets. Well, we have to sleep and go to Africa now. The meeting, the Africa Investment Forum meeting, which started on Wednesday, ends today. And we do know that one of the major focus of that meeting is a $50 billion curated bankable project that was supposed to be presented to investors. So we want to find out how that meeting has been going or has gone. And we have the Vice President for Private Sector Infrastructure and Industrialization at the African Development Bank, Mr. Solomon Queno, joining us now to give us update from that meeting. Good afternoon, Mr. Queno. Good to have you on the show.
Thank you. Good afternoon.
So we know that a major focus of that meeting was the $50 billion bankable project presented to investors. So fill us in. Who were those who attended the meeting, and what are some of the conclusions from the meeting?
So the African Investment Forum is a transactional platform to make sure that transformational projects in multiple sectors get to bankability, get to investments, and ultimately deliver the impact that we're looking for, which is a creation of jobs, quality jobs, jobs for women and youth. We're glad to say that the attendance has been phenomenal, especially if you keep it in the context of the COVID pandemic. We hope we're at the tail end, but it has involved global investors, it's involved African institutional investors, it's involved multilateral development banks, it's involved development finance institutions from Asia, from Europe, from Africa, and it's been really well attended by investors. But ultimately, the Africa Investment Forum is not going to be successful without the project sponsors. And one of the good news that I'd like to provide is that the investors were particularly impressed by the level of project development on some of these projects that have gone on actually over the past 2 years during the COVID period. So they were quite impressed to see how advanced these projects are. Some of them, beyond FEED, Some of them are at very advanced stages of, project development and maybe needing some further capital to complete the project development to bankability. Some of them post project development with well-established, bankable feasibility studies and reports for which investors are actually coming together to make in-principle commitments to finance the projects, both in terms of a syndicate of lenders and also in some cases complementing the project sponsors with additional equity. So it's been actually fantastic. And President Adesina of the African Development Bank, along with the AIF partners, are going to unveil the results of the past 3 days later today. So look out for the good news.
Oh, okay. But, before that unveiling, just give us maybe a little bit of insight. I know that the focus, the projects are supposed to be focused on agro-processing, energy and climate, education, minerals and mining. What are some of the conclusive decisions or stands that have come out in these areas?
So first of all, the projects are diversified across sectors. On the infrastructure side, it includes renewable green energy. It also includes climate resilient transport. It includes water and sanitation infrastructure. It includes ICT infrastructure. And as you said, it also includes agriculture, healthcare, and so quite diversified, and also diversified geographically across Africa. Since I'm talking to channels, maybe I'll talk a bit about projects, relating to Nigeria. There were at least 9 different projects from Nigeria, once again spanning the same sectors that, I've spoken about. A fantastic gas hub project by First E&P to really gather gas, in the shallow offshore in the Niger Delta and channel this gas to the key consumption centers. And create common infrastructure, for, owners of other OMLs around, the gas hub, for which it's not economical for them to put in place their own gas processing facility. This is the sort of project we're looking for in terms of green infrastructure. So that's just a good example. And if you permit me, let me give you another example, especially one that actually demonstrates, a key government commitment. It's the Lagos-Abidjan Economic Corridor Transportation Highway, which is, an approximately $16 billion project that involves Nigeria, Benin, Togo, Ghana, and Abidjan. The strong political commitment, the establishment of a treaty, the processing of intergovernmental agreements, the quality of project preparation done, to global standards has actually generated a lot of interest from both public investor types as well as private investor types in this project. So these are 2 examples that I thought would be, relevant.
Well, very relevant, especially the one with the Lagos Abidjan. Thank you so much, Mr. Kuna. I really wish we had more time because we'd like to know conversations around the Ukraine war and how it's affecting Africa. But I guess we'll just have to do it another time. Thank you so much, Mr. Solomon Quino, the Vice President for Private Sector Infrastructure and Industrialization at the African Development Bank. Enjoy the rest of your day. I'll be waiting for that unveiling, from the meeting.
No, look out for it, and thank you very much.
Thank you. So our time is far past for a break, but we'll do a short one, and when we come back, we'll head to the commodities market. Just stay with us. This is Business Incorporated on Channels Television.
Our website, channelstv.com, has more information on our top stories and others. Subscribe and watch Channels Television's live stream on YouTube and other social media platforms using your mobile device browser. Or download the Channels TV app for Android and iOS devices from their respective stores. You can also watch us via your smart TV platforms on Apple TV, Android TV, Fire TV, and Roku. Channels Television, ubiquitous.
You're welcome. welcome back. We're in Africa now, still in Africa. Just before we go to the commodities market, well, let's see, SDX Energy PLC said that it has achieved first oil production at the MSD 25 well on its 50% owned Meseda field in Egypt. The London-listed energy company expects the well to achieve a stabilized gross production rate of around 300 barrels a day, and that's in line with pre-drill estimates. This is the second well in the current development campaign in the west, which is located in the eastern desert of Egypt. The London-listed energy company expects the well to achieve a stabilized gross production of about 300 barrels a day. And of course, that will boost the production of Egypt. Going to our commodity space now, not far from that, diesel is a critical fuel for powering alternative energy. The national grid, which generated about 6,000 megawatts 2 years ago in Nigeria, is touching to about 2,300. The price of diesel has spiked in recent times. Now it's more than 700 naira for a diesel, and that's more than 242% since 2000. And, well, we can only imagine the impact it's having on business operations. So Sheyo Midiora is analyst with Financial Derivatives Company, digs into this to tell us what's really going on. Hello, Sheyo. So can anything at all halt this surge in the price of diesel?
Okay, yes. So what we should know is that compared to PMS, which is somewhat regulated, diesel is fully deregulated, and that is the primary reason we have seen this sharp increase in diesel prices from even early this year to what it currently is. It has almost tripled during the same period. Now, we should know that crude oil prices as well have increased sharply, and it's basically due to not any fundamentals really, but to the raging conflict between Russia and Ukraine, which basically spiked worries about scarcity and subsequently people front-loading and stockpiling. So of course that drove up the prices of crude oil and subsequently for diesel, but we didn't see that effect on PMS, primarily because it's not deregulated compared to diesel. Another thing which might have also driven up the price of diesel recently in Nigeria also is the power supply. We are aware of the current situation in the country, and this subsequently will have seen maybe an increase in demand from businesses, and subsequently would have also had an impact on that. Another thing is our currency weakening, Forex, Nigeria's currency weakening basically, and all of these little things will have had an impact on the price of diesel. And subsequently, these three reasons are primarily the things that have driven up the price of diesel in recent time.
So the NBS released inflation just a couple of days ago. We saw that headline inflation increased to 15.7 for February. And energy cost is a major component of that. Do you see this moderating? I mean, because you talked about the oil price, and we do know that after it hits, the 100, and now it's stabilizing to 190. Do we see this moderating and having a spillover effect in Nigeria?
Well, ultimately, it's going to depend on how quickly these transitory events subside or go away, basically, because, I mean, the price of oil is not driven. The recent spike, the recent movement, volatility we have seen in oil prices hasn't been driven by any fundamentals. It's basically been as a result of the raging conflict, again, as between Russia and Ukraine, and people front-loading and getting in front. And of course, nobody wants to run out of their primary energy needs, basically. So everybody just front-loading and hedging against the potential scarcity of the product. So everybody just front-loading. So whether or not we are going to see a reversal is going to be dependent on how soon these transitory events go away. And whether or not we are going to see a spillover effect into Nigeria, well, we are already seeing the effects, because we know that landing costs for some of these products have increased substantially, and this has consequently played a part in the recent price of diesel and petrol that we have seen, the scarcity of PMS recently, and subsequently the increase in the price of diesel. So yes, that's basically what is happening right now.
And how do we see this impacting on the issue of infrastructural development and integration of like the 5G technology?
Yeah, we know for a fact that telcos have recently, telcos like MTN and Airtel recently obtained licenses, 5G licenses, also PSB licenses. So these are new developments in the telco space. And subsequently, these things are supposed to drive innovation, supposed to drive infrastructure in those spaces. But without power, really, there's only so much infrastructure that it can do on a micro level. So it goes back to us working on the macros and getting those macros right. Because the thing is, without electricity, you can't even power your phones, you can't power your devices. Mm-hmm. And there's only so much technology can solve when all these things are not in place. So we really need to go back to the macro, solve those problems so that we can really benefit from things like the 5G licenses that telcos like Airtel and MTN are bringing into the market soon.
Yeah, well, thank you so much, Shay. We do hope that those problems are solved so that we can move forward in our infrastructure development. Shay Medira, analyst with Financial Derivatives Company. Thank you so much for your thoughts. And with that, I say thank you so much to you, our viewers, for being a part of this Thursday edition of Business Incorporated. We have the final one coming up tomorrow. Do join us then. I'm Ini John Mekwa.